The Nigerian banking industry has continued to be resilient despite the raging macroeconomic and regulatory headwinds that have constrained performance. Innovation and malleability of the banks, as reflected in the transition to the financial holding company structure and upscale of banking license by some players, have upheld the industry. Collaborations with financial technology companies, that's FinTechs, and domestic and international development finance institutions, DFIs, among other partnerships, have also supported the Nigerian banking industry. Well, beyond this, there is more. So I'll be joined by Ayokunle Olubunmi, the head financial institution ratings at Agosto & Co. So he'll help us unpack all of this. Hi, thank you for joining me today, Ayokunle.
Good morning.
It's a pleasure having you. Well, many analysts have, and year-end reports have actually said the banking sector demonstrated resilience in the year. I would like to know first if you share the same sentiments before we then move on from there.
Yeah, thank you for having me. The year 2023, it has been a mixed bag for the banking industry, meaning that the year started out on a very challenging note for the banks, particularly, like you mentioned, regulatory headwinds, the challenges in the forex market, and even the difficulty in the CBN meeting is FX obligations, and more specifically the accretive CRR. And of course, you know that since the banking industry operates in the Nigerian general economy, the headwinds in the economy also affected the industry. However, towards the end of the year, there has also been a bit of respite for the industry, although the industry is still not yet out of the woods, right? We had the CBN making pronouncements that the discretionary CRR will be stopped. The merchant banking segment was actually very happy because the CRR was dropped to 10%. And also, there were also some settlement on some FX obligation of the CBN. But having said that, there are still a lot of challenges in the economy that the banks are actually contending with. But something that you can give to Nigerian banking industry is that the industry is very resilient. And also, the players there, they know how to tweak their business model, how to even ensure that they're able to manage the headwinds that they actually faced with effectively.
All right, I know that you've mentioned some of these headwinds, but I would like us to, just circle back and talk about them in detail. First, you talked about the regulatory headwinds, and apart from the regulatory headwinds, we had other, economic headwinds and all of those macroeconomic headwinds. So take us through these macroeconomic and then the regulatory headwinds. You talked about the CRR, which was indiscriminate. I mean, before now, they could just get debits on their accounts, which of course affects their core purpose, which is ensuring that money moves to where it is needed and all of that. So talk to us about these headwinds and, how they were able to, get out of them.
Okay, let me first start with the one that is actually pervasive, which is what is happening in the general economy. And like we all know, the businesses are suffering, right? A lot of businesses, their cash flow has been depleted because of the declining consumer purchasing power. And because of that, you notice that the banks, those that have extended to, some of their customers are actually struggling to even repay some of their loans. So what some of them have done is that some of them have had to even recalibrate their risk asset creation strategy, try to identify the sectors where they want to play in, while also upscaling monitoring. Some have even had to even restructure some loans to ensure that they are aligned with the prevailing condition of the customers. But having said that, the CRR has been a major issue that have actually but it's actually disturbed the banks, because as at the end of last year, some banks have over 100% of their Naira deposits sterilized with the CBN as CRR, right? And even the segment that was even hardest hit was the merchant banking segment. Like we all know, the merchant banking segment is really like an wholesale segment, meaning that the funds that they get are just purchased funds, either in terms of deposits or either in terms of commercial papers or in terms of bonds. So imagine all those funds being sterilized with the CBN. So it significantly impacted the industry in terms of liquidity, in terms of even ability to deploy funds to the real sector, and even ability to even make profit on those segments, because you've actually collected money from customers, you're already paying interest on it, but it's sterilized with the CBN. So it adversely affected the industry. However, like I said earlier, towards the end, when there was a change in the leadership of the CBN, right, when we had Governor Shunubi, right, as the interim CBN governor, there were a lot of engagements with the banks, right? The pronouncement was now that, look, there's nothing like discretionary CRR, they'll try and stop it. So discretionary CRR, we all know that the official rate is at 2.5. However, the CBN then can actually wake up and debit you whatever you like. right? However, they said that, look, they stick to the regulatory.
Ayakule, let me come in here. Those debits,
Yeah.
where were they channeled into at the end of the day? Was that what was used for the means and ways, or what was it about?
I think what is clear to all of us now is that what it was used primarily as the ways and means borrowing, right? And even from the revelation we are even getting now, the same as if spending of those funds, they were not accountable, right, in terms of even how those funds were actually expended. And even now, that's why you see that now that CBN has reverted to the normal CRR, the excess CRR, the excess debit, the CBN is finding it difficult to even refund all of those banks. Some has actually been refunded in triples because those funds were given to the federal government, right, as well now, the ways and means borrowing. So it significantly impacted the industry, right? But the industry gradually, some of them have actually changed their model. I'm sure you heard that 2 merchant banks are converting their license into commercial banking, national commercial banking. So those ones will help them to even have access to deposits, right? So a lot of banks have also even tried to even recalibrate their strategy in terms of raising funds, how to channel it, and even how to help them. But another one that significantly affected the industry is the FX issues. Like we all know, Nigeria is an import-dependent country, and you realize that the banks, right, a lot of them are involved in IFF, international trade finance facilities that they give to customers. And the inability to raise FX, it has actually even affected them. And even the forward that the CBN actually even gave to those banks, promising that they will pay in the future, they've matured, but the CBN have not met a lot of those obligations. So it's been a very challenging period for the industry.
But really, what were the trends that shaped the sector in the year? The trends, how, talking about the trends, I also want you to include, how they scaled through all of this, some of the innovations, because we hear that, they were innovative and then they were, changing strategies and at every point in time. So let's look at the trends that actually, helped the sector this year.
Yeah. Okay. Let's start. Since we started talking about the CRR side, what a lot of banks actually did is to change their liability generation strategy. So what they try to do is to de-emphasize high cost funds and try and see how they can bring in more product, how they can even be able to access low cost deposits. Like I mentioned earlier, right? Given that the merchant banks are not allowed to even access the retail market, some have to even change their license. Some of them have changed their license to be able to have a commercial banking license, which will allow them to even have access to retail funds. Then what you've also seen is that a lot of banks are also trying to see how they can even step up their FCY deposits, because it's getting obvious that, look, the CBN's ability to meet those FX obligations is very difficult. So what some of them have been trying to do is that if they can actually get those deposits, they can use it to finance their FX transactions. So we've seen that a lot of new products, some have even gone into sectors in which where we have customers that even have foreign currency receivables. A lot of them have actually done that. Another one that what we've seen in the industry, like you mentioned earlier, is also a lot of them scaling up their licenses. Right, we have some that are moving from regional banks to national banks because that gives them a wider spread for them to even operate. And also, we've seen some even step into the holding company structure, because the beauty of the holding company structure is that the bank is now allowed to do non-core banking activities. Right, so see them doing things like fintech activities, asset management, and what have you.
Let me come in here, but doesn't that expose them the more? Doesn't that increase their risks at the end of the day? Converting into the holding structure.
Yes, of course. Now, I will say yes and no.
Okay.
The yes part is that, look, because you're engaged in other activities, of course, you're exposed to other risk. But another beauty of it is that, remember that when you are operating the old co structure, the bank is just a subsidiary. So you don't have a situation where you have all of the entities just combining together. The bank is a separate entity, and each of them are just a separate entity, and they are meant to just to operate on their own. Although, of course, within the ecosystem, you can have collaboration and what have you. Right? Yes, but so that one can also even help them also in that particular period. That one has also helped the industry. And of course, you see some even trying to recalibrate their risk assets strategy, where they should actually source funds to, where they should actually even deploy it to. Another thing that we also saw during the year was also collaboration with FinTechs. especially when that Naira redesign crisis that we had last year. What is obvious to the banks is that look, they need to scale up their platform, their digital platforms. So a lot of them had to collaborate with same FinTechs to actually even fortify their platform and even to also help them. But I think another challenge that probably we've not mentioned earlier is the Japa syndrome, which significantly affect the skill sets that are available for the banks, right? The banking industry was adversely impacted, right? A lot of them lost their staff, those of them emigrated, right? So that significantly affect that industry. And
All right, Ayo, to bring this to a close, I think we should just take this part, which is very important, about the recapitalization and how there have been thoughts for and against. There have been concerns about, the CAR of some of these banks, with the CBN reassuring us. But talk to us, looking at the bank. I mean, you are someone who, you deal with the financial sector a whole lot. So talk to us. Are the banks really, when you talk about the adequacy ratio being okay, is it a general thing, or are there some banks that might need to do one or two things? Talk to us about that. Let's close on that.
Okay. If you look at the banking industry, we have about 35 banks. And out of the 35 banks, there are like 5 or 6 banks that they have negative capital. And that one has been historical. Some of them have had that capital challenge for the past 5-6 years. It's not new. But excluding those other ones, you notice that the others are fairly okay. Don't forget that the banking industry has also been proactive. Even before the CBN announced the recapitalization exercise, you know that a lot of them actually been raising capital because a lot of them are watching their CRR, like you mentioned, right? We saw FCMB coming to the market, raising additional tier 1 perpetual bond that qualifies at AT1. We saw Wema Bank announcing the rights issue and also doing AT1, right? Where my First Bank is also in the market trying to even do a rights issue. So you see have a lot of them, even before CBN announces, actually even having tried growing their capital. Then something else that remember that the profit that the banking industry recorded that year, which is largely due to devaluation, is also improved their capital adequacy ratio. So you have some that are actually in the north of late 90s, and some of them even having capital adequacy ratio of about 20%. So in terms of capitalization, the industry is actually well capitalized, and a lot of them are working towards meeting the.
All right. Thank you so much, Ayokunle. We have to end it here. Thank you so much. It's been a pleasure listening to you, and I really can't wait to even listen some more. Thank you for your time.
You're welcome. Enjoy your day. Thank you for having me.
All right. Well, that's our offering today on Business Edge. Thank you for watching. I am Perpetua Fasomi Peter. Bye for now.